Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, March 2nd, 2018. Today will be a little bit briefer than normally. Today's video will be shorter, so we'll go into pretty much normal review. We'll look at stocks, bonds, dollar, gold, commodities, natural gas, and of course Bitcoin also. We'll look at it later on. Okay, so let's look at futures, S&P 500 futures, symbol on tradingview.com, ES1 exclamation point. For the information, the lines on this chart, you can see green, blue, red, and yellow lines. These are the lines calculated by my MasterChartsTrading.com indicators, so I'm going to be referring to them throughout this presentation. If you need more information about these lines and how to get them, please contact me at MasterChartsTrading.com. So here what we see on this chart is a S&P 500 ETF, is S&P 500 mini futures. So sometimes the indicator lines call the levels quite nicely. Notice that very nice level right there at 278450 where resistance came in and we sold off. To the support level at 2668.25. Notice this blue line, and there's the value that I'm hovering over. So far I'm seeing kind of like a attempted support here at 2668.25. If we zoom into intraday charts, we can see on the 4-hour charts, these are 4-hour charts of S&P 500 futures, and I believe last week I mentioned that if we get a breakout above 2747.50, this blue line on a 4-hour chart, we can see fresh new highs. This did not really occur. We saw a little bit of a breakout, a slight move higher, but then we saw sellers really came in quite hard. And again, on the 4-hour chart, notice that we had a close below this 2660 level, which is a not a very good sign. So notice we had a close below this red line back on the beginning of February, and we saw a lot of selling towards the yellow line. So maybe we will retest 2587 and possibly lower. Another possibility is that we simply turn around and continue higher. So on a daily time frame, again, the futures look pretty good. We can look at S&P 500 ETF SPY. Similar picture, not as accurate. You can see that on futures the levels are coming in exactly. I'm gonna go back. Exactly where the lines are. And for example, again, I'm gonna go back. Notice that the resistance and support levels are clearly visualized, so it makes things easier for you when you trade. Again, this is S&P 500 ETF SPY. I sent an alert to my subscribers. To me, this is a profitable trade depending on where you entered and where you took your profits. I would have taken my profits around here. In fact, let me show you my trade. Here's Dow Jones. I recently closed it. In fact, I had two positions open. One from way back when that I closed on 6th of February at a profit. Another alert was sent to my subscribers, and I actually myself went ahead and I entered at 243.49, sold half at the first target on the February 14th, and then I also closed my position at a profit on yesterday, basically on the 1st of March. So overall, again, I think the market is bullish. Some selling is present. Whether or not we will see further selling, difficult to say. Again, here's futures chart, S&P 500. Looks like the support is at hand. I would say this is a bullish chart. I would be looking to buy. All right, let me see what else I want to cover. Intraday chart. Okay, let's look at bonds. Here's junk bonds on a daily time frame. Last week I mentioned that this is most likely a something called dead cat bounce. So from February 11th till now, basically February 9th, I'm sorry, till very recently we had a pretty strong move higher, and I thought this is probably a dead cat bounce because I think that this is a bearish security. I think junk bonds have entered the bear market. I am currently avoiding them as early as February 2nd, and I am avoiding them February 2nd, 2018, and I am not really sending any alerts on the long side for junk bonds. If you're hell-bent on shorting them, you can short junk bonds at the red line and potentially the yellow line for a continuation lower. The important thing is that junk bonds and stock market correlate strongly. So I keep wondering about the same thing, is maybe junk bonds are showing signs of weakness, and eventually this weakness will spread into the stock market. All right, let's look at TLT. Here's TLT on the daily time frame. So again, this is a bearish chart. In other words, I would only look to short it. I would not look to enter long. To enter long, I would need to see a close above this blue line, which is currently at 124.66. Here we can short them via inverse ETFs. Best places to short TLT would be around 121.39, but even currently at 118.68, I would be okay shorting with a stop above this blue line. You need a larger account to trade with such wide stops that I prefer personally. Okay, let's continue to the next. Let's continue to the dollar, the forex universe. Here's DXY on the daily time frame. Again, these indicators can be found at MasterChartsTrading.com, and I can share them with you on TradingView, so you can have them on your chart. So here's dollar index DXY on a daily time frame. And you can see already that I would be pretty comfortable shorting it now with a stop above this blue line. Ideal places to short would be obviously higher, around 93.16. But even currently, I think already dollar is slightly overbought, and maybe it's time for it to roll over. Here's euro versus US dollar in the daily time frame. Nice looking candles here. Maybe we'll break out to fresh highs. British pound versus US dollar. Similar pattern to euro versus US dollar. It's slightly weaker than euro, but overall, this is a bullish chart again. Notice last time we had a nice, very nice gain here, 1,300 pips. So that also occasionally happens. US dollar versus Japanese yen, bearish pair. Notice the arrows here. Those are the places I will be pretty comfortable shorting. Here we had a close above the blue line, but on the futures chart of the Japanese yen, this did not occur, and I trust futures chart more. So here's where that close below this red line did not occur. In other words, I would have maintained a bullish bias for the Japanese yen or a bearish bias for this particular US dollar versus Japanese yen pair on a daily time frame. US dollar versus Canadian dollar. Big rally here. Not sure it's done yet. Here, previous time we had a nice move lower. Whether or not this roll over, I'll see if this rolled over. I mean, this is a strong move. It could continue higher. So AUD, USD, Australian dollar also. Yeah, it's under pressure. So I'm trying to see if maybe dollar is reversing. It's also possible. Okay, let's continue to XAU USD, which is a basically gold, paper gold. This is a bullish chart. So far not seen major issues with this particular chart. What I am seeing is issues with the GDX, Gold Miners ETF. They correlate strongly with one another, gold and gold miners, so it would make sense for one to follow the other. And now I'm wondering if the gold is about to roll over, because it looks like gold miners have rolled over, in fact, because you can see close below this yellow line. So to me, this is a bearish security now. I would just simply avoid it. But overall, gold, here's GLD, looks bullish, unless dollar decides to rally from here, which is possible, which would place strong pressure on gold assets. Okay, let's continue to oil. Here is light crude oil on the daily time frame. This is light crude oil futures on the daily time frame. This is a bullish chart. Notice a previous alert that was sent to subscribers. Very nice gain here. Now we're pulling back with a couple of hammer candlesticks. Maybe we're done correcting. Ideal place to buy would be around 57.43, but I'm not sure we'll get there. Energy ETF XLE under a lot of pressure. I am warning my subscribers, see caution here. If we get any more downside to 64, below 64.58, I would completely avoid it. All right, and then natural gas and G1 exclamation point. This is a natural gas futures. So here again we have, it's a very volatile security, so you should probably avoid it if you're a new trader. However, if you are a more aggressive trader, then you could potentially short it even currently. I am becoming more and more conservative as I get older. So for me to look for a good shorting opportunity for natural gas would be around $22.95. All right, let's finish up with crypto review. Bitcoin versus US dollar on the daily time frame. Here, as on the 4th of February, I thought that we are going to roll over into a bear market. That did not really happen. Looks like we may be pushing back up and potentially continuing higher. So let me just zoom in on a 4-hour chart. So here's a 4-hour chart of Bitcoin versus US dollar. Notice a breakout here on a 4-hour chart at 11 o'clock on the 20th of February. That particular candlestick was the breakout. So my stop would be a close below this red line, and it never occurred, and looks like we're moving higher. If Bitcoin decides to roll over, this needs to happen quite soon, because I think if we close above 13,011.16, then I would say that Bitcoin is back in a bull market, and currently it's, I think, still mildly bearish. Litecoin versus US dollar briefly. Similar picture to Bitcoin. I think it's I have a bearish bias for this particular pair, but it's a mild bearish bias. So we could see a breakout higher and a continuation higher. Here's Ethereum versus US dollar, and this one is the bullish, most bullish of the cryptocurrencies. Or here's US dollar, Ethereum versus US dollar on the 17th of February was a breakout, and I think this could go higher from here. Alright, that's it for this week's recap. If you have any questions, please send them in. Also, do go to MasterChartsTrading.com, click on alerts and indicators. I have updated the prices here, so you're getting a 30-day free trial, and then also you will get you can get either monthly or yearly deal, but also you can get just simply the alerts and no indicators. Like the indicators I just showed you, these indicators, you can also get them on your chart. Simply sign up and I'll tell you what to do. It's really simple. So again, thanks for watching and have another great trading week. Bye-bye.